Hello and welcome to our discussion on accounting. We continue the question on depreciation, and we will see here the basic difference between depreciation and accumulated depreciation. What is depreciation and what is accumulated depreciation? Depreciation, as we have seen, is a reduction in the value of the asset for the period, and it is shown in the income statement. And accumulated depreciation is reduction in the value of the asset up to the period, and that is shown in the balance sheet. So accumulated depreciation is the summation of depreciation till that particular period. So let us take this example. So you have an accumulated depreciation on this asset, and the depreciation is charged as 20% on the original cost. So the depreciation, that means the plant is 1 year old, because 20% of 150,000 is 30,000, and accumulated depreciation is 30,000. Now in this year, no other transaction, in order to focus attention on the depreciation, since there is no other transaction, there are no incomes, no other expense except depreciation, and the depreciation is 30,000 once again, because the depreciation is calculated on the original cost. So depreciation is per year is 20% of 150,000. So depreciation is 30,000. I can show that here. So depreciation is 20% of 150,000. So depreciation, since depreciation is 30,000, no cash flows during the period, and so the value of the asset remaining same, but the depreciation which is added to the accumulated depreciation, the accumulated depreciation increases to 60,000. No other change in the capital, but if you see, the reserves will change because the expenses are 30,000, and since there is no income, the profit is minus 30,000, which is same as the depreciation here. So the depreciation is the only expense, no incomes, no other expenses, so profit is negative 30,000, and as a result the reserves will come down to the extent of 30,000. No change in the loan, and so the total of as sources side is 220. Since no change, no cash inflows or cash outflows, for the time being we have ignored interest too. We can write down ignoring, okay, ignoring interest, okay. So the cash in hand will be 80,000. Cash in hand will be 80,000, and stock no change. So the total of the asset side is 220. So to recap, depreciation is shown in the expenses on the income statement as an expense, and accumulated depreciation is shown on the balance sheet. Accumulated depreciation is depreciation up to the period. For example, in this case, depreciation for the period is 30,000, whereas depreciation up to the period is 60,000. Depreciation up to the period is called accumulated depreciation, and depreciation for the period is shown in the income statement as an expense. Thank you very much.